What up, team? It's Tuesday the 15th of July and we are back to the charts again. Obviously, usually during Mondays we don't usually execute trades, given that they usually use Monday to trap traders and induce traders to go on the wrong direction of the market, and then usually on Tuesday they decide to hit that level a second time. What am I speaking about? Let me just example. Let me just use some of these things, the pad, so I can draw. Let's just say okay, let me just put two letters. Let's just say this is Monday. Okay, I guess I need to change the color on this thing or something. Okay, so white, right? Okay, let's just say this is Monday, and let's just say this is Tuesday. This is Tuesday, yeah. So let me put the Tuesday the same place as Monday. So usually what they like to do is they might begin the week. Let me just put Sunday as well, so I can draw you guys something. Okay, so they might begin the week on Sunday, right? So let's just say this is Sunday. So they'll begin Sunday with accumulation. After accumulation, they will continue the accumulation towards Monday beginning, and then they will hit the high on Monday. They will come down, and on Tuesday they might hit that high for a second time, and then they might drop one level, and then drop a second level, and then a third level, and then we shall see reversal. So this is something that they usually do. So we got Sunday with the consolidation, which is the accumulation phase. Let me just change the color on this, which is the accumulation phase over here for Sunday. And then on Monday they hit the high for the first time, inducing traders to go to the upside, and then they come down, and now when traders are selling, they will go up and they will hit the high a second time, taking out all of those guys who had it the right way, who were in short. They will be taken out with this second high hit over here, and then they'll begin the week, they'll drop, and then after one level of drop they'll go up a little bit, so that they can hit traders, all of those who are in the right direction of the market and they've moved their stops to break even or to +1. When they reverse like this, they hit all those stops, they clear out all the board, and then they continue to the downside. Sometimes there's a trade that we usually find which hits the M, the bottom of the M formation. We might sometimes execute here, and sometimes you might even find out that you might see, let me see if I can find maybe a brush. You might see like a moving average. It may be the 200 or the 50-200 moving average. You might also find like the daily low line as well, laying around this certain area. So when all of these certain requirements meet each other, we know that we have more than 1 to 2 confirmations. And then you might even find during the TDI, if you look at TDI divergence, the divergence also might be active. So you literally notice that all of these things, all of these setup confirmations, they will start to come up within the same time, and you can use all of this confirmation to your advantage, and then your probabilities of the trades being on your side, they increase from being a 50-50, because we are not in this business to take 50-50 probability setups, right? We want 60, 70, 80% on our favor. Obviously sometimes it might still go against us, but we just want to execute at a place of comfort, knowing that we executed the trade sticking to whatever principles that we have, which is our strategies, right? Obviously they might give us Monday, boom, the first hit to the high, which is the fake move, and Tuesday they might retest that same place again a second time, just to make sure they've taken out all the other traders, and then they might hit the first level. And one thing that most people don't realize is that the real market movement is slow and steady. All of those fake moves, all of those fast moves, you see price flashing and whatever, that's just to induce traders, that's just to clear the board and stuff, whatever, all of these other things, you know. The real market movement is slow and steady. Just like here, they hit the reverse, slowly dropping, and it feels like it's never gonna end. And if you are in the wrong side of the market, it's just crazy, bro. It's just crazy. And then after that, we have our level 1. This is our level 1. And then from our level 1, we have our level 2. And then for level 2 we have our level 3, and for level 3 we're expecting some sort of reversal. Sometimes it might be Sunday, Monday, Tuesday first hit, Wednesday drop again, and Thursday drop, and then end of Thursday or Friday we might start seeing a reversal, so that they can close within range, because these guys, they cannot move price however they want it. They have certain limitation placed to them by world banks and all of these other things, you know. So these are certain things that we use to our advantage. This is why we use what do you call it, daily average. Let me just check it out real quick. Let's check it out real quick. ADR. Yeah, this is why we use ADR, and we can see that this is what we're looking at GU right now. So let me see if I can open up GU real quick. Yeah, GU. So you can see that GU 3 times ADR is 239 pips. So now that we know that, okay, fine, price has moved. Let's just say priced from this point. Let me use this. Okay, let's just say price from this point to this point moved 239 pips. Now we know that we are going to count the levels as well. Now we know that, okay, fine, we have our level 3. We can see also the EMAs. They are spaced out. Usually on level 3 the EMAs are spaced out, so you can see all of these other things, and there will be confirmations. And you also check the pips, the ADR, and you see like, okay, we have extended. Let's just say like ADR is now on 260 or whatever for the week. So now you know that they have to close the week within the range, because they have certain limitations that are placed to them, so that they don't actually end up devaluing that certain pair that you are trading in. So all of these things you can use as confirmations. It's just a number of different things that you can use as confirmation, so that you can execute at the right price and point. And the more you execute, the more you try, the more experience you gain, the better you get at identifying this thing, as long as you stay consistent and you stay disciplined. And this actually requires a lot of patience for your specific setup, because most people, they don't want to sit around. They want to come to the charts every single day, and they want to execute every single day, which is not, the business shouldn't be like that. You have to stick to your rules. You have to be very strict. And if you don't find a specific setup, don't execute. Don't even attempt. You can show up every single day, which is something that you must do. Show up to the charts every single day, but it's not every day that you must trade. So yeah, I think the other benefit of having a trading bot like mine, it has taught me patience, because I know that, okay, even though I'm not executing, I'm still getting something on the side. So I feel like it was a game changer for me. Right now I don't have to pressurize myself like, oh, I have to execute, I have to find a trade today, which was something that made me lose a lot in this business. So obviously, let me just give a quick market breakdown now for the week. We are looking at GBP USD, and as we are looking on GBP USD, we can see that we have our levels. We have our M formation over here, peak formation high. We have our level 1, level 2, and right now we are probably on level 3 right now, which could be this whole area right now. And let me dive down into the M15, which is real close to the real action. Right now I don't like how price is right now. It's just hit us, it's going to the upside, so I'm not really interested unless price gives me a proper pattern. It could be maybe some sort of W formation off of the Asian high, or a W formation off of the Asian midline. So it could be like this. This is the Asian midline. Since they already hit once, they could decide to come back to the Asian midline and hit a second time, making this W formation, which is something that they usually do. They would hit here and they would hit here. Sorry guys, I failed art class, boys. Drawing, I'm quite better at drawing, to be honest. Okay, so they might hit here for the first point, and they might hit the second time as well over here. So this is something that we can use as confirmation. And then if we were interested in entering in a setup like this, then we would know that our stop would be below the Asia like this, and our TP would probably be targeting TP1 this high, and then maybe we could extend a little bit more like this, which would be a proper setup as well. So yeah, let us look at EU as well. But before that, there's another probability as well. There's another setup as well that they usually do, which is the W, sorry, off of the high, which they hit the first time, and then another session they hit the second time, and then they continue to the high side, which is something that we usually execute on as well. So let me open EU right now. Let me see what's happening on EU. Just given that EU and GU, this was a setup that we analyzed yesterday. Obviously we're at level 1, we're at level 2, this is now level 3, and since we are now around our level 3, we can see that yesterday we drew this. It didn't happen exactly at the timings that we want, as price started reversing on the Asia. So I did not catch this setup, but the direction, this was already there. We had already predicted, given that we are now on level 3, so we are now kind of looking for certain reversals, right? So right now, as we are right now, I would be interested as well if price came, rejected, gave us a double bottom, like a double formation, so I can take longs. But as of yet, where price is right now, I'm not interested in executing any setup right now. So this is it, guys. I wanted it to make something really short. I was just sharing some insight with you guys. I hope you can use this in your trading and you can improve. Just add this as some sort of extra confirmations and setups to your list. You must have a list of different type of setups, because the market is constantly changing, so you must learn to adapt and develop a specific type of mindset, where if the market is going high side and it changes and it shifted, you should also shift. Don't stick to one direction of bias. This is not what we are in the business for. Other people, they stick to one. It's gonna buy, it's gonna buy, it's gonna buy. No, you adjust. If the price is now going down, you adjust to that. This is what I love about this specific strategy that I use, which is BTMM, and this is why I've been able to also profit and make some consistent returns out of this system. Obviously, I still take some losses from time to time. This is when the proper risk management comes in play, because if you don't have a risk management, you can have a system that's 80% profitable and 90% profitable, but if you are risking 100% of your account, or 80%, one losing trade is enough to wipe you out. So a proper risk management will help you, especially in the long-term perspective. So this is it, guys. I just wanted to share with you guys some info. I hope you guys can benefit from this as much